Hello.
Yes, sir.
Hello. I think my Zoom had disconnected. Can we commence?
Yes, sir. You can come in, sir.
Oh, sure. I'll do that. I'll take the screen.
No, sir. Just a moment. We'll be starting with the introduction, sir.
Okay, that's fine. Okay, that's fine.
Am I audible?
Yes.
Okay. So good evening, everyone. On behalf of HR College and HSNC University, I extend a warm welcome to all the first year students, the faculties, coordinators, and our guests for today. Today's session is on the topic from pocket money to portfolio, understanding markets. I am pleased to introduce our guest speaker for today, an investment professional with over 8 years of experience across government securities, corporate bonds, and money markets. He currently serves as the Assistant Vice President of Trading at Ujjivan Small Finance Bank, where he actively trades central and state government securities, manages the AFS and HTM portfolios, and has also helped set up the bank's equity desk from the ground up. He holds an MBA in finance and is a CMT Level 3 candidate. His background includes stints at the South Indian Bank and STCI primary dealer, where he honed his skills in yield curve analysis, macroeconomic research, and discretionary trading models. I invite everyone to please welcome me in inviting our guest speaker for today, Mr. Pasan Choksi. Sir, the floor is all yours. Sir, you're not audible.
Thank you so much for the kind introduction. And thanks, HR College, for the opportunity. I'll take it forward from here. Uh, is the screen visible?
Yes, sir, it's visible.
Perfect. Take care. Uh, Good evening, everyone. We'll begin with our session for today, from pocket money to portfolio. Broadly, I've divided the session into three parts. First, why money matters and why building the right financial mindset is of importance. Now, I want this session to be a dialogue one and not a monologue one. So please feel free to have your queries, or give your suggestions, or any ideas or answers when asked. Okay. So just wanted to understand what is money. If one or two of you can respond on this.
So may I speak?
Sure, sure, sure. Please feel free.
So money is the medium of transaction. That's the
Okay.
general definition of money.
Okay. Anyone else?
So may I speak?
Sure, sure. Please don't take permission. Please speak.
Sir, it is a means of exchange to satisfy our needs, which is the primary source after barter system.
Correct. Perfect. Okay. So now that is an actual definition of money. But when we are seeing it from from various age groups, now this is in a very silly way. Now for a student, money means freedom. For parents, it means responsibility. For business owners, it means opportunity. And for investors, like how the course which we are studying, it means a tool to do various other things. Now, very simple thing. When I was student, I thought rich people had unlimited money, and I started working. Then I realized rich people don't have unlimited money. They just make fewer bad financial decisions. Now, once again, a question: what is the biggest asset you have?
Time.
Sorry?
Time.
Correct. That's it. No, that was the answer what I was looking for, and that's answered very correctly. The biggest asset which you students have right now is time. Now let's combine both money and time, and let's see our next example. Why no? Why timing is important? Now we have two scenarios. Person A who starts investing at 21. I think which is the age. You must be 17, 18 and a few years after your graduation. Let's take you start investing at 21 and or the person A stops investing at 30 and person B starts at 31 and continues till retirement. Who becomes richer?
Person B.
Person B. Okay, that's fair. Any other guesses?
Person
Person
A.
B.
Sorry?
Person A who started investing from 21.
Okay, but he's only done it for 10 years. Person B has done it for 30 years.
Person B.
B? Uh, Okay, now let's do some numbers. So I've done it on an Excel. Now let's do it away. Okay. Is the Excel visible?
Yes, sir, it's visible.
Okay. Now let's assume 5,000. When you start working or at internship or obviously not right now because pocket money no thoda kam rahega. But let's assume you somewhere start. You can make say 5,000 rupees. Now this is very simple Excel. What is your annual return? Equity markets broadly give an annual return of around 12 to 13%. CAGR 13, 14. Best guys gives 15, 16, 17. Beyond that, for trading, yes, it is possible to make 1 year. It is possible to make in 2 years. But people who claim 100%, 200% are all scams. So just to bring reality into picture, let's assume an annual return of 12%. The retirement age for anyone is 60 years. Person A starts at 21 and stops at 30. So he's effectively in for 10 years. Person B starts at 31 and will retire at 60. So he's in for 30 years. Now let's do some math. Now these are the calculations. What we can also do is SIP calculator. Okay, let's assume we are not much into Excel. We'll do a simple group. Okay, 5,000. If I do an investments, expect a return of expected return of 12%. Time period I'm invested in is for 10 years. So effectively after 10 years, I'll make 11 like 20,000 once 179 for person A. But he has invested only for 10 years. Now remaining 30 years, this amount will stay with him. So that amount will further be invested. Now he is not putting any new funds. Person A invested only for 10 years and he will keep the capital as it is. So total value is 11 lakh 20,179. Now this amount goes into lump sum 11 lakh 20,179. Now that stays for 30 years, assuming returns are of 12%. The total value comes around 3 crore 35 lakhs. Now person B is invested for 5,000. Return is 12%, time period is 30 years. Person B makes around 1 crore 54 lakhs. Verifying numbers with Excel, similar numbers. Person B does 174 and this person A has 3 crore 44 lakhs. Now, effectively, if you see just pure cash basis, we are not taking future value or anything into consideration. The amount invested was 6 lakhs in this case. The amount invested was 18 lakhs in this case. Now, based on numbers, we are able to see that person A who started earlier has made more money than person B. On the face of it, when you see person B has spent more number of years, 30 years, he is given more number of investments than person A. But person A started quite earlier than person B. So that is the magic of starting early. Are you guys getting it?
Sir, but he invested only for 10 years, right? From 21 to 30, and person
Actually,
B did it for 30 years.
correct, correct. Absolutely. He invested only for 10 years, but he did not withdraw the amount after 10 years. He invested for 10 years. He had inflows for 10 years. After 10 years, he stopped and he let the same amount grow for remaining 30 years. Person B does nothing till age 30. From 30 to 60, he invests every time, and at end of I mean 60 years at retirement, person B had invested for 30 years, and person A effectively had invested only for 10 years, but his investments grew for 40 years.
Oh, so he held the amount for 30 more years after
He
investing.
Yes, 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 he held the amount 30 more. So right now we are focusing on total investments which are going into the account. So you invest for 10 years and then you keep it. The money stays invested.
Acha, okay. Like I thought he withdrew the amount
Acha,
at
no,
30.
okay, okay, okay.
Okay.
So he was invested. So that is why when we were seeing this calculator, Uh, so we'll do it again. For 10 years, the money grows at 11 lakh 20,000. Now there are no more fresh investments. Now this money will be treated as a lump sum investment. 11 lakh 20,179. 11 lakh 20,179. Which go sorry, for 30 years. This money is and it remains invested for 30 years. It becomes 3 crore 35 lakhs. Are you clear?
Yeah, now I'm clear.
Correct. So the idea is, no, since you are college students and you are in this field, so I mean, we will always feel that no, I'll start retirement planning after 30 years, after 40 years. But a simple mathematical number, no, we've done. Even if you invest for a smaller amount, but stay invested for a larger amount, the returns are far higher. And as students, or even as students, when you go becoming as working professional, there are probably three financial rules which you have to follow. First is spend less than you earn and invest the difference and repeat that for 30 years. Let's assume someone starts working at 25. Say your graduation is done at the age of 20. You Someone pursues their masters. It gets over by 23, 24. Let's assume a 25-year uh, period is 25 age is where someone starts investing. So broadly, from there to another 30 years is where you should repeat the same. Any questions on this? Why, so the idea of bringing this topic was to show that money definitely grows. Now there is a quote which goes that no about no there's an Einstein photo which says no, Einstein has definitely not told that, but it says that compounding is the eighth wonder of the world. Now what example we had seen here is a typical and very simple way of compounding. How money grows, multifold. Any questions? I'll take that as a no. And I'll proceed to second topic, which is I think what are the financial markets and what financial markets actually work, how financial markets actually work. So journey of money, how it grows. Let's say if I work at a place, I get my salary. Let's say I draw 100 rupees. Now the salary will come into my bank account. Now the salary will come directly into my bank account. Now and what will the bank do of the money? Any idea?
They will grant the loans to other businesses.
Perfect. They'll grant the loans to other businesses. Now, when money goes into corporate loans, let's take example of say a paints company. Okay, and a paint company had a small setup. Now they are looking for 100 crores worth loan for their new plant. So what happens? Now I as a bank, I have kept money. Let's say I've kept 1 lakh rupees with the bank. Now various other people, someone will give 50,000, 1 lakh, 1 crore, 50 crores, 10 crores, and same amount will go to the bank as loan. Now the business requirement was there. They had the requirement for 100 crores for setting up the paint factory. After which they set up the factory after availing the loan, and they started making money. And in turn, they will make profits. Now this is the example of no to point where I have given bank, I have invested in bank at say 4.5% in savings account, and bank has given 8.5% in loan to the corporate. So corporate loan is around 10%, 10-11%, depending on the interest rate cycle. And so around bank will earn 500 basis points of margin. Now, let's assume the business did not take a loan. The business came out to public for taking money, and not as a loan but as a share capital. So what happens? The company will raise money from public. Public will invest into that company. The company will commence its plans and then give profits and ultimately the returns to investors. So the journey of money goes effectively from money savers to money, I mean, someone requiring someone with excess of money and someone with deficit of money. Like after let's say I earn 100 rupees, my expenses are 50 rupees. Now remaining 50 rupees, which is surplus for me. Now some other company is sitting at deficit of say 500 rupees. But when 10 people like us give 50 into 10, the requirements of the company will be done. So money is effectively transferring from surplus mode to a deficit mode. Now, how does that happen? Here we had taken example of banks and then shares example. But now deep diving more into what is a financial market. Now, financial market is a place where buyers and sellers exchange financial assets. Where right now, when we mentioned, money goes from surplus to deficit. To deficit from place of surplus to place of deficit. Now, taking an analogy of a vegetable market, let's say buyers want tomatoes, and the one who has tomatoes, he wants money. They exchange their price at the same time when the transaction is done, and products will change. The vegetable vendor will sell tomatoes to the person, and person will give money. So effectively, there is a trade, and it has happened at a price. Let's say a fair price of tomatoes 50 rupees, but seller is selling for 70. And if I'm a buyer and I go to buy 30 rupees, we will effectively not be able to do that because fair rate is around 50 rupees. When buyers and sellers both agree at a similar fair rate, that is when the transaction will happen. And this was a very simple analogy to explain financial markets. Similarly, let's assume there is a there's a company which is requiring funds, and I, as an investor, have funds. Now, when we agree at a certain price, that is when the transfer will happen. And why do financial markets exist? No, now financial markets exist for the same reason. It transfers money from idle hands to productive hands, from the place of surplus to the place of deficit. Any questions still here? I'll take that as a no. Now we'll proceed to types of financial markets. There are various type of financial markets. There's money market, there's capital market, there's commodity market, there's forex and derivatives. We'll go through each one of them very briefly. What are the horizon and what are the types of products which are there? First, we'll see what is money market. Now, money market is a very effective tool for raising money. And why it is effective? Because it is firstly short term in nature. So even as investors, we are sure, let's assume visibility of a company is for 1-2 years that the company will survive. As against no, in 10 years or 20 years, we don't know or at what cycle will the company get stuck in. So if I'm lending to someone for less than 1 year, no, as investors will be, quite, they will have far more confidence, no, than lending for a longer period of time. So these are short-term instruments and broadly less than 1 year. Now, what are the various type of instruments we'll see? First is treasury bills. Now before we proceed, now from investors category, as retail, when we were discussing investors as you and I. Now there are various other categories of investors. Now various other category of investors include, firstly us. Second, it includes banks. Third, insurance companies, mutual funds, pension funds, corporate treasuries who have surplus funds. Now, let's take example, say an ITC company, ITC which is there. They has a very huge balance sheet. Now they will at any point of time have say 3, 4, 5,000 crores in their bank account. But keeping money in their bank account, let's say 2,000 crores, is not going to yield them anything. As retail, as individuals, we will have the opportunity to keep money in savings account, which will at least give us 3-4%. But for corporates, when money is in current account, it does not yield anything. So in this case, what happens? So even corporate treasuries are active to place money for short term, because a corporate treasury is keeping money because it may require at some point of time, but they also want to earn return. So various money market instruments which include treasury bills. Now treasury bills are instruments, broadly 91 day, 182 days or 364 day treasury bills. Those are basically raised by government and who are the investors, banks, insurance companies, mutual funds, anyone. Now banks are having surplus cash. Let's say I as a retail have given bank 1 crore rupee. Now various other 100 people have given bank 100 crore rupee. Now bank will have certain restrictions as to lending, etc. They will also have to maintain certain liquid cash in case if there are a lot of withdrawals which come. So what will the bank do? Bank will take that 100 crore rupees and invest in treasury bills. So effectively, what transaction has happened? I have given money to bank at say 4% in savings account. Bank has invested in treasury bills at say 6.5%. The rates will differ. Say current 1 year treasury bills is say somewhere around 560, 570. Now, what are commercial papers? Now, commercial papers are very similar to treasury bills, and even CDs are very similar to. So all three instruments are money markets. But difference is treasury bills are issued by central government. Now why will central government issue? Because government has to do a lot of projects for various healthcare projects, infrastructure projects. For some time, they may have temporary cash flow mismatches. For that, they will borrow 50,000 crores, 1 lakh crore in a year, and effectively repay it after say 6 months. The government has a deficit for 6 months. They'll borrow for 6 months and then they will effectively repay. Now, commercial papers are instruments which are raised by private organization and non-banks. Why non-banks? Because whatever instruments a bank raise are called certificate of deposits. So CDs are essentially issued by banks for shorter tenure. Now, why will a bank need capital? Let's assume bank has a strong lending which has happened this quarter, and bank has had a requirement of 100 crores for short-term funding. So bank will broadly raise money by certificate of deposit. And who will invest in these bank CDs? Anyone can invest. Let's say a bank who has surplus money will invest in these banks, a mutual fund, an insurance company, which the insurance company will get regular flows from various policyholders. Now, let's say I put 50,000 rupees in an insurance policy. Now, that 50,000, the insurance company will have to invest somewhere else, because they will also not keep the fund idle, and they will invest in these certificate of deposits. What are commercial papers? Commercial papers are issued by non-banks and private companies and non-banks. What is call money and what is TREPS? Now, these are also money market instruments. Call money is where banks lend informally from one bank to another bank, and TREPS is where informally, as in I'll correct the word. banks lend money from one bank. Bank will lend money to another bank without any collateral. And traps is where they have a third party, where they have collateral securities. Here, for call money, bank will directly give to another bank at say 6%, 7%. Traps rates will be lower because there is some backing which is there. Like an example, home loan will go at say 7.5%, but a working capital loan will go at say 12, 13%. So similar concept is here. And broadly, I as an individual, I actually work in this ecosystem every day, where we deal with treasury bills, commercial paper, CDs, call money, and bonds as well. So now this was money market and as it is a short term in nature. Now we'll move on to something which is called capital market. Now, what are capital market? Broadly focusing on long-term funding. And as the name suggests, capital in nature. So you're effectively putting in into a say company's capital, various instruments, stocks, no equity markets, bonds, IPO, corporate bonds, government securities. Now let's do it from we'll do equities at last, stocks and IPO. We'll do it last. Now, first we'll start with government securities. The way government raises money via T-bills, same way the government is raising money via government securities. Now, T-bills were for a short term. Government securities range anywhere from 1 year to 50 years. With most borrowing happening in 10 year, 15 year, and for any country to see where its bond yields are, we take reference to the 10 year benchmark. So effectively, when you see news, you'll often find the 10-year benchmarks being quoted. India 10-year bonds were say 5 basis up, 10 basis down. US bonds were 10 basis up, 10 basis down. So bonds broadly, focusing on a 10-year benchmark. Corporate bonds, similar to commercial papers, corporate bonds are issued by, NBFCs and non-bank entities. Bonds broadly, broadly it will fall in similar category. Now, what are stocks and IPO? Now, IPO broadly will come under stock, but there is a reason why I have classified it separately as an IPO. I have because IPO is the first time when the company will come to raise money in the market. When they are raising money, effectively we go back to the same discussion where we had earlier. Money moving from surplus place to the place of deficit. The example where we had discussed about paint company raising money is how the whole IPO market is structured. And stocks, why they are important for capital market functioning? Because they give an exit to investors. Why we need an active equity secondary market is, let's say if I've invested in a company, in the same paint company, let's say I invested 5 crores at the time of their IPO. Now my 5 crores are with the company. Now let's assume I have a requirement. Now I may have various other requirements if I want to buy some property, or I have better investment opportunities. Now 5 crores, if it stays with the company, there's little I can do about that. But when the market is quite active, when the secondary market is active, I will go onto the exchange, recognized stock exchange, NSE and BSE, currently two recognized stock exchanges. I can sell it on markets, and then I can take my 5 crores back, or whatever the price is in that case. So that is why for an effective long-term capital markets, we need an active stock market, broadly referring to your secondary markets. What are commodity markets? This is very simple in nature: gold, silver, oil, natural gas, wheat, cotton, coffee. Now these are just various not asset classes, but various products where most of the trading happens. Gold and silver are seen as a benchmark of your economy. If there is if the gold prices are going higher, means there is less faith in economic scenario right now, and there is a high probability of high probability of depression coming into the economy. Now, why that X and why gold is also called safe haven? Because when people don't have any other asset classes to invest, or let's say if I have funds, but I'm not sure how the economy will grow. If there is a recession, there's a depression scenario in the economy, I will go back to invest into investments into gold. Now, if you are kind of tracking markets, commodity markets and gold to be precise, last 6 months gold has corrected, but prior to that, gold had a dream run. It valuing it on a say US dollar basis, it went from 2,500, it went to 5,000. Now there are various other reasons. There are central banks who are buying gold, and when central banks as a buyer it comes, their quantum is quite huge. There were concerns about whether economic crisis will happen, etc. So that is why gold is a proxy to your economy. Forex market, uh, dollar being the reserve currency, we have euro, pound, yen, rupee, and various other currencies. Now, forex market is quite big, and a lot of transactions happen because there are constant imports, exports which happen. Let's say TCA example, TCS or Infosys has given an IT contract to TCS and Infosys have taken an IT contract from say company based in Germany. So for that, now German company is going to pay them in euro. Now they are not going to pay them in Indian rupee. So what will effectively happen? Let's assume euro rate is 100 right now, uh, and the transaction has effectively happened. Let's say worked out for 1,000 euros. For let's say 1 lakh euros, so effectively 1 crore worth of transaction. Now TCS has committed to 1 lakh euro. Now what will happen? What if euro moves from 100 to 110? So at the end of the contract, the TCS will get 1,000 euro, which is valued at 110. Effectively, they'll make 1 crore 10 lakhs. That is a sweet scenario. However, what if it goes down to 90? Now TCS will only make 90 lakhs out of it. So for effective, because there are various countries which are there, you need an effective forex market to hedge your receivables. Now this is an example of hedging. There is a lot of trading which is involved into forex markets and various other things. We'll move on to derivatives market. Now, derivative markets are again, what example which we gave of hedging right now. Derivative markets are there in essence for specially broadly, for hedging only, but because of various reasons, speculators are active, arbitrageurs are active, and the list goes on. So, what are futures, options, swaps, and forwards? Now, as the name suggests, futures broadly being settled on a future date. Uh, as we had just the way we had taken an example of TCS. That the TCS is going to get contract after 6 months. So what will the corporate treasury of TCS do? They will hedge and sell 6 months futures for euro. So now let's say they had agreed at 1 lakh euro at a rate of at the prevailing market rates were 100. So what will TCS do? They will sell these euros at a future date for 6 months down the line. Let's assume effective 100 or 100.5. So now what TCS has effectively done is they have kept their loss. If a euro goes down to say 90, but TCS has effectively hedged their requirements at 100.50. Now, only issue is if it goes above 110, let's say euro reaches 110, now they will be in a fix. But for investors and for company also, they don't want any negative surprises. A negative surprise is if it reaches 90. Now, if it has gone higher than it, that's fine. That's part of market. But the only thing is there should not be any incremental loss. Same thing with options. What are options? Broadly classified into call and put options. Giving, as the name suggests, it is giving me an option. Now, if the transaction is favorable, I have an option to execute the transaction or not. That is a very simple way to say swaps. As the name suggests, you are swapping something. You have a fixed cash flow, and someone has a floating cash flow. You swap the transactions. Let's take a simple example where I believe interest rates are going to go higher, and another counterparty is believing the interest rates will go lower. So what I will do is, if I'm believing the interest rates are going to go higher, what I will do is I'll try to keep my loan at a fixed rate, because I believe interest rates, if they will go higher, I'll have to pay more. But there is some person who believes the interest rates are going down, he will want a floating rate. So that he will expecting that rates will go down. So when rates come down, I will benefit. Now we both have separate cash flows, so we will effectively enter into a swap, and no, then no, basically your cash flows are exchanged. Now it goes more into complications, but broad idea is swaps. Now forwards are very similar to futures. Only difference is futures are done on exchanges, NEC, BSE. Forwards are in informal agreements which happen. Now, what moves the market is what we are seeing. Just a few things like news, interest rates, inflation, profits, wars, election news. So elections at no, elections are a very key thing. Like if I mean, obviously you would not be there in market at that point of time. But in 2009, when Congress government had come for a second time, equity markets had seen an upper circuit. A circuit markets open only for 4 5 minutes that day. Because what FIIs effectively saw is that now after no, after a lot of time we are finding a stable government, and that stable government has come at the backdrop of a 2008 financial crisis, which extended it to 2009 first half. When elections were there, if foreign institution investors saw India as a growing economy with higher interest rates, possibility for growth, and we have got a stable government. That is why markets reacted. Similarly, when the current government, when they had got lesser seats in this 2024 elections, market kind of reacted negatively for the sole reason because now there is a risk that they government may take populist measures for that growth will be hampered and various other reasons. So there's technology, government policy, let's government increases taxes, reduces taxes. So government policy, no, another example in 2018, no, when 2018 or 19, I'm not sure. I think 2019, government had reduced uh, taxation on foreign investments. So market reacted because FI money will directly flow, the currency becomes better. So various other things, there are various other reasons why market moves, and market will move for anything and everything. Even if there is a news which is going to come down 10 months down the line, or for that matter of fact, even 10 years down the line, market will try to forecast each and everything today. So today at 3:30, whatever the price is broadly is where market has factored every future possible move. Now, any questions still here on types of financial markets or anything?
Sir, why is gold an important indicator of the economic position of the country?
Correct. No, thanks for the question. It's a very interesting question. I will explain again why gold is an important uh, indicator for economy. What happens? Let's say if I'm an investor, uh, I have a very huge investment book. I will either put money into as FDI or FII capital. Either ways, either will put money into listed stocks or giving capital to unlisted markets. Now, now broadly, economy overall will move in tandem. It's not that no, US is doing so. There will be certain lags, obviously. It's not that when US markets are bad, India will not no have an impact. There's a common quote which goes, when US sneezes, when America sneezes, India catches a cold. Okay? So it is that no, anything which is going to happen, at a bigger economy is going to multifold and get applied to smaller economies. 2008 crisis, going forward, when you study also, you will find the citations about 2008 crisis. Now that was a very huge housing bubble which had happened. and which had a ripple effect on various markets. Indian equities were down, I think, 50-60%. Now, in those times, I, as an investor, I'm not sure what will happen to the economy. Globally, everywhere, my view is going to remain same. If even if there is some crisis in Eurozone or US, my effective impact, everyone will have an impact. And the impact, it's basically ripple effect which will have. Now, if I'm not sure what to do with the money, where should I park my money? My safest bet my safest bet is gold. Why gold? Because it is broadly safe haven, and gold is again very liquid in nature. So gold prices so you and I will not move gold prices. The gold so the if the so institutions, which will put money into what we call uh, institutions will put money into gold basically because they have a view that no other things are not doing fine, and no, I don't have to put money anywhere. I will put money broadly into gold, and gold is kind of no, it is backed by central governments. Okay, and various banks hold vast quantities of gold, and it also helps in inflation hedging when economy goes into crisis. Okay, in periods of high inflation, when purchasing powers will change. Okay, anywhere I invest money, it will no, broadly go into loss. So I will no, so I will probably put my money into gold because it will also give me some bet on inflation also. Hmm. Does that answer your question?
Yes, sir.
Okay, perfect. Any more questions, or should we proceed?
Sir, can you explain options again?
Sure, I will do that. So options, as the name suggests, what are options? So options give right. I'll break the definition. Option gives right, but not an obligation to do the transaction. Now let's assume you bring it. You simplify it. Sorry, you simplify it as an insurance premium. Now I take car insurance policy. I pay say 10,000 rupees as car insurance premium. Effectively, what is going to happen if there is any damage, if there is any accident? The company is going to, the insurance provider is going to reimburse my expenses. What if the car doesn't go into any accidents or any major repairs? The 10,000 will still be paid uh, as premium amount. Okay? Now hold that thought and bring to the markets. Now let's assume I have a negative view on market. But what if nothing happens? So let's put it in a better way. From this example, now I have an option. Now, what has happened? Effectively, I've paid 10,000 rupees as an insurance premium, but then there is no claim. Now, bringing this as into options, uh, I have a right. Now, breaking the definition, I have a right, but not an obligation to honor this contract. So let's say if I'm bearish on market, but if market falls down, then only I want to exercise this contract. Otherwise, I will not exercise the contract. Now, here in this case, you are at the better off. If market falls down, then you will make money. But if it doesn't fall down, it goes up, then I don't want to honor this transaction. Now, this is doable. But why will the opposite person do it for you? The opposite person will do it for you because you are taking this insurance that if market falls, I will make money out of it. Similarly, in car case, if there is accident, I will get money from the insurance company. Here, if market falls, I will get money. But if nothing happens, I will still pay you the premium amount. Now, the premium amount is quite marginal compared to the actual cost. Like, say, car example, no, accident happens, the costing is around 1 lakh rupees. Uh, but you are paying 10,000. So, effectively, it's only a marginal amount. Similarly, for options, it is only a marginal amount which you will have to pay. but only if it goes into your favor, you will make money. If not, then you will not honor the contract.
Okay.
Any is it cleared?
Yes.
Sorry.
Understood.
Okay, perfect. Thank you. So now we'll move on to investing versus gambling. ठीक है? You would have heard, ये सट्टा है, सट्टा बाजार है. But I beg to differ on that. Whenever there are calculated investments, it is not gambling. Now, what is gambling? And we'll discuss on that. So, what is investing? Firstly, we'll see. If you're broadly say investing, based on research, who is basically having the ownership of it, long-term value you are looking for. You're finding if it is available at correct price. You look after compounding. Now, what is gambling? It is basically, you're betting on luck, random outcome. You're waiting for, doing it for entertainment. Just as intraday karna hai. You're looking at for short term, etc. ठीक है? Now, very simple way to identify, whether my investments is gambling or not. ठीक है? A simple way is to ask yourself. Now, if you're buying a profitable business after studying it, you've done fundamental research, the XYZ. Is it gambling? Gambling? No, it is not gambling because you've done your research. There are, when you study further, you'll have fundamental analysis, technical analysis, and various other things. Now, studying this, do you call it as gambling? No, you don't call it as gambling because you've put your thoughts into it. But you are doing it because your financial influencer on Instagram told you, you had some Telegram tips, your friend told you, your chacha, fufa, mama, some other told tip. In market parlance, you'll often find something called tip. Okay, if you're doing tips, your friend told you, and you're doing that without investments, that is gambling, that is pure speculation. Okay. Now, we discussed about various financial markets, equity, capital markets, money markets, forex markets. Now, a simple question is, what if financial markets didn't exist? Now my question is कि कल उठ के बाजार बंद हो गया. Let's say exchange is closed for tomorrow. What will happen? Now we'll see. We'll see the reason. Firstly, your capital is frozen. Let's say there is company which came out to the IPO. The paints company only. I gave 5 crore to the company at the time of IPO. Now suddenly one fine day, financial markets shut forever. Will I be able to sell my shares? No, I will not be able to sell my shares. What will happen? My 5 crore is stuck with the company. That's it. Now I will, as and when the company gives dividend or XYZ other reasons, is the only way I will make money out of it. Otherwise, nothing will happen. But first, my capital is stuck. No price discovery. No, basically, no. Say there is some good news for say paint sector. So what will happen? Uh, I bought say this paint company at 100 rupees, but there is good paint sector. Oil prices have come down. Then effectively, I mean, price will still remain at 100 because there is nothing which has happened. You can't do anything. So effectively, there is no price discovery. Stifle business. Stifle broadly, no, that something is it broadly it will stop. Take it, the business growth will stop. Why the growth will stop? Because now no one is going to invest more money because no one will get exit from a capital. So everything will stay there. Vanishing retirement wealth. Now, within the earlier example, we had seen how 5,000 investment becomes 5 crores. Okay. Now, effectively, one thing which we also have to realize that 5 crores right now is not 5 crores after 40 years. Now, this is where your time value of money will come. So, effectively, let's say I for no earlier, say 20 years back, 10 years back, dairy milk chocolate used to come for 10 rupees. Now 30-40 rupees के नीचे कुछ भी नहीं है. Even smallest one will come for 30 rupees. So something broadly, similarly, what money right now, if I were to put 100 rupees right now, okay, and after 1 year, if I just keep it in my wallet, nothing is going to happen. But if the same money, if I put it at bank, it will give me at least 104, 105 rupees. So effectively, that is how money is growing. Now, the point on vanishing retirement wealth is how we've seen how this money grows at 12% annum. Now, if there are no markets, where will I invest? I will not be able to invest anywhere. So the whole wealth will broadly be retiring. Concentrated wealth inequality. Inability to hedge risk. Example of TCS. Now they will not be able to do anything, and they will let euro move wherever it is. And if markets are not there, even euro will not move. So everything will happen as same thing. Concentrated wealth inequality will increase. Person who has money today will be there. Someone who does not have money will not be able to grow. Innovation, private deals, severe economic stagnation, and various other reasons. No, what will happen? So economic growth effectively will slow down dramatically. Why we need financial markets? Because market helps convert savings into productive investments, and when that happens, all of these issues are out of picture. Any questions still here?
I have a question.
Sure.
If there will be no markets, what will be the rest of the sectors which the people can make an ROI?
Okay, that's an interesting question. Now let's assume there are no financial markets. Okay.
Right.
Where can you make money? Okay. Effectively, how trade used to happen years back, like not exactly barter system, but effectively, we'll broadly, go on that line only. A farmer is producing, say, potato. You directly take potato from that, and how you will make, because effective the whole mechanism of money will stop. Why I'm putting money in bank? Because I'm getting 5%, 10% return. Now the whole everything will effectively stop. We'll have to go back to barter system, because let's say if you have funds and I'm in requirement of a housing loan, I will go to bank for money. But now now there is money. No money is nowhere to be put. Okay, you will also keep the money to yourself. I will also not have a house to buy, because no bank will lend me, because bank will also not have funds. See, effectively everything will go for a standstill. No, for firstly to I mean, finding return is separate. We will have to effectively go back to no the barter system which was there, because everything will
Basically,
start. Sorry.
if the financial markets are no more,
Huh.
basically the private money lending system would be back again, right?
Right.
Non-institutional funding.
Huh. Correct. Non-institutional funding will be back. But
Right.
the question is, what will so that is why the whole concentrated wealth inequality will happen. Now
Okay.
you will be surprised to know effective, say, personal loan goes around 13%, 14%. But any idea in tier three cities or unofficial lending, at what rate happens? Any idea? Any guess? क्या रेट पे loans जाते हैं where banks are not serving?
There are non-institutional loans
Sir, I know.
uh, at the rate of 24% interest, I guess.
More
So
than
24,
24, sir.
correct. So
Sometimes
24,
36.
correct. So
It,
those
it's
are
a rough assumption.
correct, absolutely. Now those 24, 36% are still loans given out by NBFCs. They are still part of the institutional framework. Any idea
Mhm.
where जब वो loans at what rate loans go
I
from
don't know.
non-institutional?
I might sound sketchy or scary,
Hmm.
but uh, in class 11th, I
Hmm.
had a sir.
Hmm.
That sir teaches me. That sir was teaching me basic Excel, and then Excel with basic to advanced Excel, and
Okay.
after that, he was teaching me advanced Excel.
Okay.
He had took a lot of from. He had took a lot of loan from non-institutional background, from
Absolutely.
private money
Private
lenders.
money lenders, correct.
So the rate of interest was so high. Uh, he was not able to pay the loan back.
Correct. Absolutely. Yes.
So uh,
Hmm.
he hanged himself. He
Oh.
committed a suicide.
Hmm. Unfortunately, there's a sad reality, which is there.
Right,
The loans, you'll be surprised to know loans go at a rate of 60-65%. And for trades,
right.
sometimes the loans go at 1% per day. Effectively, that's 365%. Okay? Now, for businessmen who need only loan for say 1 day or 2 day, they easily borrow at 2% when they're making a profit margin of 10-12%. But still,
Oh,
farmers have to pay loans at 50-60%.
okay.
So, unfortunately, there's a sad reality. Okay? Do we have 10 minutes more?
You can go ahead. It's going nice.
Yes, sir. Yes.
Okay. Now coming on to the final section, from pocket money to portfolio. Okay. No, now it's the final part. What you have to do from learning to action. Okay. Now you have had a very brief idea about everything. When you study in your syllabus in your courses, you will realize there are a lot of things. When you read newspapers, when you read books, you'll effectively have a lot of the whole. You'll have a lot of ideas. No, market doesn't end at commodity markets. There's a lot to it. Hedging, arbitrage, and there's a lot of it, how you put your money, how you invest, retirement funds, etc., etc. But keeping said, you have had your basic learnings today. Now what do you do? Okay. Now what are the next steps? Okay. Open bank account, if not already, and I believe because since this generation uses UPI, etc., bank account is there. But if no, then open your bank account, learn budgeting. Okay. And how you learn budgeting, right now, let's say if I get 100 rupees pocket money, if 20 goes in traveling, 20 goes into food, 20 goes into expenses, even if 50, 60, even if 30-40% if I'm able to save, I'm not telling you to put a one rupee ka hissa, but broadly you should be aware where there are money leaks which are happening. Okay. So, you build your emergency fund. Now, this may not be applicable for next 2 to 3 years, because you're in college. But going forward, okay, no, this will be of important help. Open Demat account only when ready. Now, the fact that I'm telling you to open your Demat account when you're ready is because no, the quote which I've written, you don't learn swimming after jumping into the ocean. Where do you do it? You do it in your swimming pool. You understand markets, you read news, you do your back testing, you see how now see, your objective right now is not to earn, your objective is to learn. Okay. So when you focus, you do paper trading, the let's say even if you put 1 lakh rupee and if you make 10%, 10,000 is not really going to move your needle right now. No, right now you will feel that 10,000 is important, this that, but look at the larger picture. What focus you have to do is on delayed gratification. You are delaying your gratification, you are learning right now. So that is why the focus on Demat account, only when you are ready, only when things are fine, you take small steps. And the essence is learn before investing. Because markets, broadly, there's a very thin line of difference between trading and gambling. Market will not take a lot of time to make you push that line. Right now, say if you don't learn, if you just and you will see your colleagues making 15%, 20%. No, effectively you will be tempted to go on for tips, etc., etc. Okay. So all that is not advisable. And plus, I believe right now your focus should be to study, and right now you are also not required to earn money. Okay. So if you're doing that as part of your internship, if you're getting some stipend, then no, you can definitely put. But if no, then what you do it, you start small. Okay. You recollect the example where we started with 5,000 rupees. You started 500 rupees. 500 rupees, no, that is a manageable amount. Even if no, then maybe you do it for 3 months, 6 months, and then you put a certain amount. But you need to test your waters with one feet. You can't test waters putting both feet. Okay? Because then what will happen? Effectively, when 9 o'clock, markets open, you will not sit at lectures. You will open your trading apps. All that is not required right now. Okay? Do it when there is adequate time. So, putting in a very simple code, if I have 8 hours to sharpen a tree, I'll spend 7 hours sharpening the X. Yeah, sorry, if I have 8 hours to cut a tree, I'll spend 7 hours sharpening the X. So a very simple quote is, how we put it, and keep learning, evolve, because market changes every day, price changes every day. You also have to evolve every day. Biggest financial mistakes students make now, since this is specifically for everyone. So buying latest phone on EMI. Let's say if I'm earning a stipend, मैंने internship ले लिया, 10,000 15,000 stipend है, I will go and buy iPhone worth 1 lakh 1,20,000. There's no need, ठीक है उसमें. Copying influencers. Now say influencers is recommending an XYZ shoe, I will also buy the 10,000 rupees. It doesn't really make sense, ठीक है. No, not keeping an emergency fund, no financial goals. Now, why, you will always feel, yeah, I am, say, 17 years, 18 years old. I don't want to go into all of this. There is enough time, okay? But it is about taking a habit. It is about putting a habit into picture, okay? So psychologically, if I am trained to do things in a certain way, no, I will do it. Now, putting a simple example, cricketer knows, for him or her to play in Indian cricket team, ideally 2022 यूएसए में break, आपको break मिलेगा. But do you think, at 20, if the person starts playing cricket, उसको Indian team में chance मिलेगा? They will not get a chance. For that, you have to start when you are 5 years old. Same thing is with your, your retirement funds, your wealth, your money which you want to make. It is fine because you will start earning at 25 only. ठीक है, 25 के बाद, when you will work, you'll start earning money. But the efforts go 5-7 years before that, before you start earning, because you make up your mind, you make up your mindset. The magic of small beginnings, you refer to the compounding example which you did, 5,000, effectively becoming, a bigger amount. Power of reading. This is, I think, where everyone should focus. You need to read a lot of newspapers. Even one newspaper is fine, okay? You will broadly be, because you are a student of commerce. So, and it's not that, you a BFM student will only read. ऐसा नहीं है. You are a student of commerce, or for that matter of fact, you are basically dependent on finance. So you should be aware of, any latest thing, any tax changes which are coming, any benefits, etc., etc. You have to come. And there is books which is there which you have to take care. And so even for newspapers, I don't recommend in shorts. ठीक है, वो summary है, वो headlines है. If you really want to read language, if you really want to understand things, ठीक है, you have to pick up a good business newspaper, read it. It will not take more than 40 minutes or 30 minutes, ठीक है. And once, after that, once you make an habit up, 15-20 minutes में, you'll realize what is important, what is not important to read, ठीक है. Same thing goes for books. When you start, financial markets, you read Warren Buffett, you read Charlie Munger, ठीक है. Charlie Munger, uh, Warren Buffett, broadly they were, they started the Berkshire Hathaway. Peter Lynch, now Peter Lynch is, referred better than Warren Buffett, because Warren Buffett had funds which stayed with him. But for Peter Lynch, he was managing the fund which had regular withdrawals. Despite withdrawals, he did all of that. Benjamin Graham, Warren Buffett considers him as his guru. Read Benjamin Graham. Okay. And so we are not saying, we carry, no, there will be various other investment people who will be there. I'm not recommending you to copy their portfolios or copy their strategy, but we have to copy their principles. We have to copy their discipline, which is there. And myths versus reality. You need minimum 1 lakh, you need minimum 10 lakhs, you need 1 crore to invest. No, you can do it with small amounts. ठीक है. Stock market is gambling. We have heard. Investing is ownership of business when done with research and discipline. When you're putting your efforts, be it fundamental, technical. No one is saying कि, any approach is right or wrong. Okay? Rich people only invest. No, that's not. Investing is, in a way, many people build wealth over time. And to become rich, you have to make your money work and not, you working. Okay? When your money effectively works, that is when you will become rich. Okay? One bad investment means, you stop. No, that's not. No, you learn, you improve, you improvise. Let's assume you are a trader. ठीक है, आपका एक strategy में पैसा नहीं बन रहा है. What you do is you improvise the strategy, see where it is going wrong. You do it over and over. ठीक है, and timing is everything. It is definitely, but beyond timing, discipline and time, both, they matter greatly. Why timing is greatly, because in first slide only I mentioned that someone who started at 21, no, is making more money. But we are missing at the fact of discipline. उसने 21 पे start किया. The person saw market coming down, he stopped his SIPs. When market recovered, he invested more. Okay? So you are missing out on, because in bad markets you'll make more money. So you are missing out on lot of that. So effectively, discipline and time both matter greatly. Okay? Now, key takeaways from this session. No. Rule one, no, earn but never stop learning. Rule two, save before spending. And rule three, no, invest before it's too late. Okay. The very simple way to put it, because this everything is about money. When you are in your 20s, you think money buys happiness. 30, money buys choices. When you're 40, money buys peace of mind. And when you're 60, you realize best investment apparently was never your stocks. Okay. So it is, you have to learn throughout, you have to, money, the role of money will change, the priority of money will change from time to time. So when you are short of money, you will feel you don't want to take a cab. You will take, you will take bus, you will take the train. But when you are occupied with other things and money is your second priority, your priority is to save time. So money in various forms will change, at various other times. So I think that's it from my session. Any queries you have?
Sir, I have one doubt.
Sure,
So you told investing is not gambling, right?
absolutely,
So you do all your research and then you're sure
absolutely,
and then you invest.
correct,
So then, sir, why don't you put all your money in that investing? You also save apart from that. Why then?
absolutely.
You
Okay,
know,
that's
na,
a but yes,
you
yes,
know you will get returns and it is not gambling where you are not sure about anything. You are investing, then you should put all your wealth and all your money into that.
absolutely. Okay. Now, I will answer it in a very silly example. Okay. We all know when there are dark clouds, it will rain. Okay. Do you agree with this point?
Yes, sir, I know.
ठीक है. But in a very silly way, there are chances that it will not rain. ठीक है. Similarly, when there are clear skies, बारिश आ जाएगा for 5 minutes. ठीक है. It will rain and it will effectively it will go. So there are scenarios where what you have studied and what you have worked upon may not be true. Outcome change हो गया. ठीक है. And effectively that is very much possible. I did a research, I went wrong. They said we have to accept the fact. So why not put all money in one specific investment is because no, there is one more proverb. Don't put all your eggs into one basket. Okay? Because there are chances that you are wrong. Okay? And being wrong is not a sin. Being wrong is part of the process. If I put all money into one stock, let's take examples. No, now again, those examples will come, when you are into in your syllabus. Okay, there was a company called Satyam, effectively, called as one of India's, yeah, growth story, etc., etc. All it did was it did an accounting fraud. Okay, now मैंने balance sheets पढ़ी, my view went wrong. Okay, I had to take an exit. The stock, I think, went some 80-90% down when the fraud was uncovered. It was very big fraud. I think you will definitely have it in your syllabus. So effectively, my view went wrong, and no, I had to take a hit. I mean, the person, investors will have to take a hit. Okay, आपका view wrong है, it is part of the process. But you will not invest in one single avenue is because of the same reason. You'll have to diversify. But over diversification is also not going to lead you to anything. So you have say 10, 12 companies invested, okay, and you do that. Now answering now why not only equity markets? Okay, why do I have done my research? Okay, let's take example. In last 2 years, equity markets made a high of 26,000. Currently it's trading at 24,000. It's down 10%. Okay, but when I look at commodities, okay, when I look at commodities, gold went from, I'm talking about US numbers, gold went from 2,000 to 5,000, currently at 4,000. Okay. Do you sense my investments in equities were wrong? No, they were not wrong. but it gives me an upper edge. No. So basically, when I'll calculate my returns on a weighted average basis, okay, I will perform better. In last 2 years, equity markets have stayed at same level, but my FDs would have given me 15% returns at least. So there is enough emphasis, and there's enough focus on your diversification also, which comes into picture. So investing in only one thing, yes, my view can go wrong, and it will definitely go wrong at some point of time, because things change overnight. Let's say if I'm betting on say a company, making making tech, example, uh, uh, what do we call, say company is broadly focusing on the auto ancillary company is focusing on, say, cars with petrol. One fine day you realize that petrol is now no longer needed. My bet on that company went wrong because now trend has shifted. So वैसा है, my research can go wrong because it's a VUCA world, so things will change. So that is why you have to
So basically, my point was
hmm, correct, please.
basically my point was that you are just predicting, right, in this market, and you can never have the full knowledge. So it is
Absolutely,
basically
absolutely,
gambling at some point of time.
correct, correct. Hello,
Yes, sir.
hello. Yes, so sorry I lost you. After what did you mention after prediction?
I'm telling that at some point of time, you're just predicting in this market. You don't know the
Correct.
full knowledge. You can never get the full knowledge around
Definitely,
the world
absolutely
at
no,
any point of
absolutely,
time. So
absolutely,
you're just predicting, you're just trying your luck, right?
absolutely, absolutely. But when we do that, when research
Goes
comes
right,
into
if your research goes right, then you'll earn money. If you do not,
Absolutely,
then
absolutely, absolutely. But a luck with maths into when I'm putting maths into it, like if I've done my research, the probability. So broadly, what we are investing, we are betting on probabilities, okay? Because I have a probability that this instrument, this asset class would outperform, okay? Because effectively, whatever decision you do is as similar to as a heads or tails, okay? Either the asset will give me returns or it will not give me returns. मतलब profit होगा या loss रहेगा, ठीक है? But I know the outcome is either one or zero. But what I am doing by research, I am just betting on a higher probability in this case. Hope that answers your question.
yes, yes, sir.
Perfect. Okay. So, no, and famous economist, J.M. Keynes always says that in long run we all are dead. Okay. So similarly, I mean, there are a lot of things, which we do. Our view will go wrong. Our view will go right. There are various other things which will come into picture. But all we are doing is we are playing on probabilities, and nothing is certain in nature. Any questions?
So, can you suggest three books that have helped you gain knowledge and you think that every commerce student must read?
Definitely, I will tell you. Now I will tell you books which I have read, okay? And now my answer will be more biased towards financial markets. Now, commerce does not include financial markets. Now, firstly, we'll have to accept the fact, okay? But my answer will be more skewed towards financial markets. For fundamentals, I've read Peter Lynch. So, when we were discussing these books, I had taken few names. So, there is book on Warren Buffett, there is book on Peter Lynch, One Upon, and there's One Upon Wall Street. Okay, these books for the economy side, fundamental side, and for not for technicals, because since we are discussing markets technicals, if you are reading, there is one book by John Murphy which is there, and which is there. And if you broadly want to understand psychology, I think there's this book on psychology of money. I think Morgan is the author. Let me check. Yes, money book. Hi, it's Morgan Housel. Okay, that is a very good book. If you want to read. So my answer is more skewed towards financial markets. I'm aware. Books on Warren Buffett, books by Peter Lynch, for the fundamental side. And on technical side, John Murphy is a good author. Okay, and that is, these books have helped me shape my career right now. Where I'm into trading and investments. Okay, and one book on money part from psychology part is the Psychology of Money by Morgan Housel.
Okay, sir. Thank you.
Perfect. Thank you. Uh, any other questions, queries?
Hello, sir.
Yes.
Um, can you suggest any one like apps that we can invest in, like that we could use, that we can start? Like,
Okay, okay. Please complete the question. Sorry.
like there are a lot of platforms to invest, like Upstocks, Zerodha. So, which
Absolutely.
one do you recommend?
Absolutely. Okay. Now, first, I will tell you apps where you can learn. Okay. Then I will tell you where you can invest. Okay. You should have money control, which is there. News वगैरह आता है. There are certain research reports which is there. Economic Times has an app which is there. Okay. Then all that is there. Then you have enough data on RBI website. ठीक है. वहाँ पे data आता है. ठीक है. So all of that will help you. You read newspapers. ठीक है. All of that will firstly tell you. I mean, uh, I mean what to do. ठीक है. Why to do rather than what to do. ठीक है. Now, if you specifically ask me for a broker platform, ठीक है, it is a simple, it is a commodity, ठीक है, it's like buying a chocolate, ठीक है, Cadbury लो या फिर XYZ Lind लो or XYZ any other chocolate, ठीक है, it is a commodity in market. Everything will give you the same thing, ठीक है, there is absolutely no iota of difference which is there, ठीक है. So no, for whatever names you told, Upstock, Zerodha, Angel Broking, no, broadly everything is same. Everything works on a similar business model. Zerodha has a lot of content which you can study for personal reading. Zerodha University is a good educational platform which is there. So maybe you can take help of that. Uh, that's it. So, matlab zero, the upstocks, any angel broking, anything and everything is same only. Even you want to go to a traditional broker like Kotak or Motilal, things are not going to change. Only thing is zero the upstocks or discount brokers. They will charge you less of brokerage. Okay? Whereas when you go to a traditional broker, you have to pay 20 paisa, 30 paisa, or some other brokerage or other terms which they agree. So effectively, if you were to ask me to rank zero the upstocks, I will rank everyone as equal.
Okay, sir. Thank you.
Perfect.
So
But
can you suggest
sorry. Yes,
can you
please.
suggest some platforms to learn about investments and trading on YouTube or something like that?
Uh, so Zerodha Veracity is there. Okay, they have some good good content which they have. Uh, and apart from that, see, I'll not recommend YouTube because people who are really smart are not on YouTube. Okay, they are busy writing books or they are busy making money. Okay. So अगर आपको genuinely पढ़ना है, first thought the process go around reading books. ठीक है. No, very simple. You'll Google, you are, or with Chat GPT and all coming in, you put in your requirements, they will tell you which all books you should study. Okay? I will definitely not recommend you YouTube and all because बहुत सारे नोइस लोग आ गए हैं, ठीक है, एंड ऑब्वियसली दे आर मेकिंग मनी, ठीक है, व्यूज है ये है बट इट डजंट गारंटी no, for that matter, when we realize जितने famous influencers है, influencers coming on finance, ये लोग tweet भी डालते हैं ना, a lot of times they're very illogical, ठीक है, they have not really put thought into it. They got famous because वो पूरा कोविड के बाद वाले ट्रेंड था, people came into markets and all. So I'll definitely not recommend you any YouTuber or any other page. But I will definitely recommend Zero the Veracity. It's a very good program, very thoughtful. काफी ज्यादा they have written good content, so you should definitely do that. Read newspapers, read books. That's it. Don't follow anyone on YouTube. जो YouTube पे है, वो
No,
time
I
pass
was
कर रहा है
asking
सब लोग.
YouTube पे because if we want to learn fundamental analysis or technical
Absolutely,
analysis from beginning.
absolutely,
So I am just a student. I know, let's
absolutely.
assume nothing about these things. So
Hmm.
where can I learn this apart from YouTube, whichever you recommend?
Okay. Okay. So I'll tell you, I also had gone through the same journey. What I did, I learned it from books. Okay. So now at that point of time, I had an option. Okay. Either I go to under a trainer जो सिखा रहा है, or I learn it from books. ठीक है. I took the other way. ठीक है. That is why I believe my fundamental logic reasoning is very strong, because I would have read some 30, 40 books to to understand technical analysis, for that matter of fact. ठीक है. How I did technical analysis, you start from which is the simplest books. ठीक है. When ChatGPT and all come in, you can also ask ChatGPT which is the simple book. Now, I'll tell you my journey how I started. First, I read the NCFM module on technical analysis. Okay. Then I read John Murphy. Then I read Edward Magi. After this, my whole concept of technical analysis broadly became more stronger. Then I read specific books on various topics. Like if I want to read something on candlesticks, I read Steve Nissen. If I wanted to read something on Fibonacci, I took another book. If I wanted to read on Elliott wave, I read a specific author. If I wanted to read about a specific indicator, Ichimoku, I read another book. So idea is first you make your base stronger. Okay, how do you make your base stronger? By reading basic books. Okay, and trust me, I had also gone through the same journey. I know there is absolutely zero difference in the question which you have asked and the answer to which I'm replying. I did it 12 years back, where we had benefit of Google and etc. था तो we could directly get soft copies and all. ठीक है. Now things are becoming more cheaper, more better with AI and all coming in, where you can tell AI only to rank which are the simplest books. How should I start as a student? ठीक है. I will definitely recommend books over YouTube any day, absolutely any day. उसमें कोई second thought है ही नहीं. Because when YouTuber आपको बताएगा, ऐसा चार्ट है, you do this, you'll only understand that. But when you're reading that book, you are living that journey of the author who's written that book. You will have questions. Then you look it up on a chat GPT or in Google. I'm not understanding this meaning. No, mera interpretation, is it right or wrong? No, when back 10, 11 years back. So I was from 2012-15 batch. Okay? Back then we did not, Google would give us answers. But whether I am right or wrong, वो उतना capability नहीं था. Now with AI coming in, ChatGPT, Claude, Gemini, I said you can ask whether my interpretation is right or wrong. Not that any of the AI platforms are right 100%, but they are far better than my thought process as of now. Okay? So you can do that. I am a staunch believer of books and newspapers. Absolutely. No YouTube is all time pass. Reading in shorts is all time pass. Okay? Focus where real things are and you'll learn better. ठीक है. Anything else?
Sir, I have a doubt.
Sure.
So at the age of 18, 19, if you are saving from our pocket money, is
हाँ.
SIP a safe option for investments?
Sorry, आपका SIP के बाद वॉइस क्रैक हुआ.
So is SIP a safe option for investing? Like अगर आपको रिस्क में लेना है कुछ.
Absolutely, absolutely. So now I will tell you, say if you are in this market, okay, if you are a financial, market as in, say you are at the age of 25, 30, और आप equities full time देख रहे हो, then I will not recommend it to you, ठीक है? But a student, I will, or someone who is not in the market full time, I will definitely recommend, ठीक है? I will definitely recommend mutual funds, ठीक है? And there's one more thing, effectively market को आप beat नहीं कर पाते हो. Most PMSs claim we have this strategy, that strategy. And when you read books also, ठीक है, you can read this One Upon Wall Street, which is there, ठीक है, और there is one more book. Effectively, आप सारे फंड मैनेजर्स का परफॉर्मेंस निकालोगे ना, निफ्टी रिटर्न्स हैव नॉट बीन बीटन येट. ठीक है. So you take data of all PMSs. ठीक है. You should exclude AIFs because AIF derivatives करते ये करते हैं, वहाँ पे रिटर्न्स आपके चेंज होते हैं. But if you're doing pure cash investments, you will find that आप इफेक्टिवली कितना भी ट्रेडिंग करो, आगे पीछे करो, कि मार्केट रिटर्न्स बीट करना बहुत डिफिकल्ट हो जाते हैं. ठीक है. नाउ म्यूचुअल फंड्स व्हाट दे डू इज मोस्टली दे विल कॉपी मार्केट क्या हो गया, आपके निफ्टी 50 स्टॉक्स हो गए, निफ्टी 100, निफ्टी 200. ठीक है. बियॉन्ड दैट उतना डाइवर्सिफिकेशन करते नहीं है. तो इफेक्टिवली मुझे जब मार्केट को मैच ही करना है, एंड एज ए स्टूडेंट राइट नाउ, ठीक है, So now what will happen when you do with say small SIP of 500 rupees? ठीक है, एक तो you there is something called skin in the game. ठीक है, I am invested in market. ठीक है, तो थोड़ा at least I will be aware, थोड़े I will watch my returns कैसे perform हो रहे हैं, how is the index performing, and then you will learn. So I definitely as a student I will not recommend कि ना आप जाके zero दा पे trading शुरू कर दो. Definitely not right now. 3 years into it, 2 years into research, then you put small money. ठीक है, आपको अभी तो पैसा नहीं कमाना ना. ठीक है, और आपको अभी पैसा कमाना, देन यू माइट एज वेल एज टेक अप अ पार्ट टाइम जॉब और समथिंग. बट इफ यू फ्रॉम मार्केट्स डू दैट डिले ग्रेटिफिकेशन. ठीक है, ग्रेटिफिकेशन को डिले कीजिए. यू विल फाइंड दैट यू हैव अ सुपर आइडिया, स्टॉक 50% ऊपर हो गया एक साल में, बट डिले दैट. ठीक है, एज एंड व्हेन टाइम विल कम यू इन्वेस्ट.
Okay, sir. Thanks.
Hello, sir.
Yes,
Looking at how AI is transforming finance and
absolutely,
business,
absolutely.
which skills would you suggest us to learn? And as someone, like you said earlier, who doesn't really have any skin in this game or who doesn't really have any skill, like a
हाँ,
beginner,
हाँ.
what would you suggest?
So with AI and all coming in, ठीक है, नाउ फाइनेंस में काफी चेंज हुआ है. ठीक है, आई विल टेल यू नो टिपिकल रोल्स लाइक इक्विटी रिसर्च वगैरह. ठीक है, अब वो हो क्या रहा है, बिकॉज इक्विटी रिसर्च एनालिस्ट का टाइम बहुत ज्यादा जा रहा था इन नो इन डेटा क्रंचिंग, इन डूइंग एनालिसिस. नाउ ऑल ऑफ दैट इज काइंड ऑफ रिड्यूस. ठीक है, एआई हैज डेफिनेटली टेकन ओवर. ठीक है, व्हेन इट कम्स टू ट्रेडिंग आपका वो फर्दर इतना इम्पैक्ट नहीं आया, बिकॉज algorithms and all were there from last 10-15 years. So trading में such नहीं हुआ है, but research में definitely a lot of impact has happened. ठीक है, if you ask me as student of AI, sorry, as student of finance, traditional roles may become obsolete in next 5 to 10 years. So what do you do it? What do you do about it? ठीक है, so this is very commonly told. No, AI is not going to replace jobs. ठीक है, but jobs will be replaced of people who are not embracing the power of AI. ठीक है, तो आपको आपके फाइनेंशियल एनालिसिस पता रहने चाहिए, बट यू नीड टू बी फास्टर इन क्रंचिंग डेटा. आपको पता रहना चाहिए कि सपोज आप ये डेटा का एनालिसिस कर रहे हो. ठीक है, you should know what you have to do, but वो जो आपको टाइम कंज्यूमिंग पार्ट था, that you'll have to do it through AI. ठीक है, so even traditional roles like digital analytics, sorry, data analytics, ठीक है, all that are becoming slowly redundant, because जो data analytics का जो सॉफ्टवेयर पे रन करने का 10 मिनट का काम था, AI अब मुझे 2 मिनट में करके दे रहा है. ठीक है, सो इफ यू आस्क मी व्हाट यू डू, तो आई विल नॉट रिकमेंड यू, मतलब मैं वो नहीं बोलूंगा आप डे वन पे जाके पाइथन वगैरह सीख लीजिए, बट इफ यू हैव टाइम यू शुड डेफिनेटली लर्न. ठीक है, बट नाउ मोर एंड मोर इन्वेस्टमेंट रोल्स आर आस्किंग वेदर यू हैव कंप्यूटिंग नॉलेज, आपको वेदर यू आर एबल टू ऑपरेट सॉफ्टवेयर, बिकॉज नाउ दे डोंट वांट समवन हु इज जस्ट वेस्टिंग आवर्स बिहाइंड एन एक्सेल. आप उस सर्टेन सिस्टम, बेसिकली इफ यू आर अपडेटेड विद हाउ सॉफ्टवेयर एंड वर्क, ठीक है, तो उनको बैकग्राउंड में they will have to spend less time in learning. So if I recommend up, if you want to learn, you can learn Python and all. But again, वो भी नहीं है. You should learn how to play around with AI. आप डेटा के साथ कैसे खेल सकते हैं. And you should be hands on with AI. तो वो है. AI is definitely will impact jobs, but ऐसा नहीं कि आपके सारे jobs ले लेगा. But you should be aware. Traditional roles will be there, but traditional roles are improvised with AI.
Thank you, sir.
Yes. Any more questions?
Students, are there any more questions? Any further questions from anyone?
So,
Yeah, hi, Hitansh.
can you send your number?
So you can reach out to me on LinkedIn. ठीक है, so we can discuss anything over there, and then we can discuss over email or something. You can reach out to me on LinkedIn. It's the same name, Pasan Choksi. You can find me on LinkedIn.
Okay, sir.
Okay, perfect.
Anyone else? Any questions? So I think we can wrap up the session for today. So Before we wrap up the session for today, I would like to formally extend a heartfelt thank you to Mr. Choksi for taking his time to be with us today. In a world where financial literacy feels out of reach for young people, your talk today has done something very special. It has taken all of these complex ideas and made them accessible, practical, and even fun for the students. You didn't just explain what the markets are and what the various markets are. You also showed us the magic of starting early and the importance of reading and how the habits that we build with our pocket money today can shape the portfolios that we hold tomorrow. He has brought both real world expertise and genuine teaching warmth to today's session. So thank you, Mr. Choksi, for your time. Your insights have helped all of us into taking that first step towards understanding the markets, 1 rupee at a time. So thank you so much, sir.
Perfect. Thank you so much. Thank you for the kind comments. And glad to do that. I've been part of, I've from the case. I was part of the HSNC board. So I mean, I've
Yes,
studied there. I've studied in KC College. Okay,
KC
so
College, yes, sir.
and my wife is from HR, so I had to do that for HR college. So
Yes.
and thanks Darshit sir for reaching out to me and giving me an opportunity to speak on this. Okay. And just
Definitely.
on the closing comments, if there's anything, always reach out to me. No, and
Definitely.
frankly, I'll be more happier, when someone will tell, I started my investment journey because of this session.
Oh,
And
yes.
if that happens, then I'll consider today as a success.
Definitely, sir. I think the students know where to reach out to you as well. So they definitely will reach out to you. Thank you so
Perfect.
much, sir.
Perfect. Thank you so much. Thank you so much. Thank you so much, everyone, for your time.